Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through some of the comments sections. I'm going to try to answer to the best of my abilities, give you my financial opinion. And we're going to start with this guy here, or girl, whoever. Let me zoom in here. It says, are you going to ignore the 10 million barrel crude inventory build up plus another 6 million gasoline and distillates? Living in denial with these days, the play 2023 is bonds. Here's the problem with that play. Everyone thinks a recession is going to come. Everyone. Everywhere on Twitter, recession, 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 YouTube, all recession, a housing market crash, everything. And you know how you make money? You do opposite of everyone else. There's a bunch of cash sitting on the sidelines right now. Now, I'm not saying that we are going to go straight higher. And I'm going to talk about some of this. One data point does not make a trend. And they're still releasing strategic petroleum reserves on top of all this, which goes till the end of December. So we've got China reopening. We've got inventory levels that are flat at commercial level, but we just completely destroyed the SPR, so to speak. All of the fundamentals are still intact. So my question to you is, does one data point make a trend? It doesn't. There's no living in denial. And of course, this guy is like, yep, been saying that for ages, but believe he's banned me. No, I haven't banned anybody. He gets salty if you call BS. That's one data point, guys. One data point. Storage normal for winter, and those barrels are for sale to Europe. Yep. We'll see what happens. And I hate to say it, but bonds may not work out the way that you think they're going to work out. They are going to sell a lot of bonds coming up this next year. And we'll see which way interest rates go. That'll be an interesting mix there. Oil is most manipulated commodity. There's more to it than reserves. It's used to control forces of power. If you think oil prices are staying below 80 for the foreseeable future, you don't understand geopolitical dynamics. And I think there probably is a war going on. Strategic petroleum reserve releases in Russia and how much money Russia makes. It goes on and on and on and on. Either way, projected demand next year is 104 million barrels per day. I don't think we've got it. I don't think we can pump 104 million barrels a day. There's going to be some sort of deficit, and that deficit's going to increase the price of oil. So that's my take there. Let's come on down here. There was one I want to touch up back here. It says, wait till we get government bans on electric vehicles when a rolling blackouts are on. And there's also that going on too. And although electric vehicles don't really take too much demand away from oil, we could see bans on electric vehicles and charging them during certain parts of the day. We're seeing that in other parts of the world. I know some places in Europe are doing that. So that's also another thing. But here, just overall in general, guys, like I know a lot of people are trying to time all this stuff. And they're trying to time, like a crash. You're trying to do this. The best investors in the world will tell you, don't do that. They'll say, if you find a trend and it's trending in a certain way, stay long. Stay long and ride through it. That's what Peter Lynch would say. That's what Warren Buffett would do. And I don't think anyone necessarily knows that the size of this recession, what exactly is causing the recession. I mean, we could speculate, yeah, money was printed. But why would it remain elevated? Do we have enough oil to meet the demand that's out there? What about all the substitution in Europe that's going to be going on with oil? And I don't know if no one has that figured out. The markets are too dynamic in that sense. And when we're looking at things, I'm not seeing weakness in home builders. I'm actually seeing strength. Pull up some charts of home builders. They look strong. They look bullish in golfings. They've got the pattern coming up, and they look like they want to go higher. Does that look like a housing market crash to you? Has this stimulus money gone to a level, pulled the interest rates high enough where it's slowing down the housing market? And at some point, that may come back down, the interest rates, to a level that's more sustainable. I don't think that would do much for bonds. There's a lot more going on than just comparing it to 2008, which had a gigantic housing crisis, where leverage in the system had to all deleverage. It's not like that. At least that's not my opinion on it. I've heard people try to make arguments where people need to move and they're going to take whatever they're going to get for the house or whatever it is. I mean, that's their argument. But yeah, inventories could come up some, and I'm not denying that. We do have weakness in the housing market, not denying that. And I'm not trying to get everything right in the exact time frame possible. I've already said I'm holding through it. That's my strategy. And I know people are like, oh, that's a cop out. Well, if that's what the rich people do and I become rich off of it, why does it matter? You think you can beat the market by timing all this? I don't think so. I don't think so. But I can tell you there's a lot of money on the sidelines just sitting there. A lot of people are afraid of this. Everyone's calling for a recession. Everyone. Maybe it's good to take the opposite bet there. And with the dynamics in oil and the supply-demand dynamics, we could see a big move to the upside at some point. When is that point? I don't know. And we were gonna rock it here. We were going to be 150, 160 probably this year if we didn't release the strategic petroleum reserves, given the inventory levels of where they would have been that price. So what they did is they held it down with strategic petroleum reserve releases, and now we're back to where commercial inventories have been flat. So it's in my opinion, I'm going to ride through it. I'm going to buy more. The stocks actually look pretty good in some of these individual stocks for oil and natural gas. And their hedges roll off. It's all positive things that are piling up on that front. So I'm not going to sell out, guys. It doesn't matter how much you comment. It's not going to get me to sell. And yeah, I might ride through some of this stuff, and it may get a little bit volatile. But that's what's going to happen. And coming down here, they're talking about digging trucks and the electric vehicles for digging trucks. Yeah, maybe we have that. Maybe we don't. I don't think we're going to offset the diesel price very quickly, or diesel volumes that we're using. Investor realize the big money doesn't look at short term. They look at 10 to 20 years out. The reason is because big money banks and hedge funds protect their liquidity. They know too many variables can cause market conditions fluctuate. As investors, we must be forward thinking and not present thinking. The market is forward future thinking by placing themselves in the best position possible to the upside. I completely agree with that. And that's how I basically structure everything. So we could get a recession here. The question is, how big is it going to be? And is it actually going to impact the stuff that we're in? Don't know. If everyone's predicting this and they all pulled their money out, it's all sitting on the sidelines. Well, that money's already out. Where's this big crash going to come from? And what if it does crash? What if we get a big crash and you ride through it? So what? I mean, that's kind of my viewpoint. Is the big crash going to solve oil? No, it's going to make it worse. It's going to make the deficits in oil even worse if we delay the investments in oil and natural gas and all these fossil fuels that we use to power our world. Now, we've got big deficits out there in commodities in general. Copper, all those, graphite, lithium, nickel, on and on and on and on. So why would I sell out? Why would I take that position and sell out of it, try to time all this? We know they're out there. It's just a matter of when then. It's not, and if your timing's wrong, you could miss the entire bull market. Why would I want to do that? So I think that the safest way, and I know it's going to, we could see volatility, safest way is to ride through it. Now, when you look at the market conditions, when does oil take off? When does uranium take off? They take off in an increasing interest rate environment, which we're in, and inflation's still high. And when that all kind of like flattens out, that's when they usually take off. So, I mean, we'll see, but trying to get this and time it perfectly, I don't know, guys. I just don't think that's a smart thing to do. But that's what I'm doing. I'm riding through it. That's my strategy. I'm buying when these things are down. So that's kind of how I'm handling all this. Nord Stream was bombed by British, confirmed. Yeah, I don't doubt it. And America was over there too. We were talking about the free cash flow in oil and the potential upside and just how ridiculous it can get if we get up in the 120 plus range. Lots of free cash flow. Yeah, and some people, like, they've bought some of the companies that we're in. Some are up 12 times their money. Yeah, I don't really set the commercials here. I just like leave it on whatever the default is, so I don't really touch that too much for the commercial stuff. Yeah, we got all these, like, whatever they're all. Andy's headline is about the Fed. When he said a while back, the Fed is powerless. Gotta love it. Well, they are. They aren't impacting the inflation rate that is today. It takes time. So them increasing rates will impact the markets 12 to 18 months out. So if they ramped it hard, it could be 12 to 18 months out. And that's what I meant by they're powerless in the short term. They can raise rates, but the money's in the system. It's already going through it. It's got the velocity. And we can see some of these commodities pull back and the companies go up because of hedges in place. So that's what I'm seeing there. Silver to SPX at an inflection point. Then it's also at the NASDAQ. Looks like we easily run up to March high, then some serious resistance. Yep. Santa got a run over by the Fed. Unfortunately, this model does not work with heavily manipulated markets as we've had for the past 3 decades. Also today, of course it works, guys. It's just people trading. Everyone wants to make excuses. That's how you don't make money, guys. You don't make money because you don't have a plan, you don't have a strategy, and you've got excuses. If the tailwinds, if the macro tailwinds are there, just hold on. I mean, that's the way that I view it. Do you think that we're going to mine less materials in the future? Do you think we're going to use less oil in the future? And is oil getting harder and harder to find and explore? Yes, it is. So why not just stay long? I don't get it. Like, why are you? I think people are overcomplicating things way too much. Just be simple. Go work, focus on your work, go do your things. And if you got some extra spare money, invest in what the macro tailwinds are for the next 5-10 years. And then we're going to get volatility. That's the way it works. Paladin Energy had like 7 or 8 50% pullbacks on the way up. It's a brutal way to play this. But if you're in it to make, 10, 20, 30, 40, 50 times your money, I don't know of any other way to do it. You're going to have to live with the volatility. You're going to have to figure out a way to manage that volatility. Maybe it's not have as big of position sizes. Maybe you don't put all your money in something. A lot of my position sizes are smaller when they start out, like 5, 6, 7% or something like that for a position size. Then I ride it. And some of them are massive now that they've gone up so much. And I'm still riding through it. Now, could we go through this cycle and it ends and then we start a new one right after? Yeah, we could. We very well could. And I'm not convinced that the housing market is completely down for the count. It depends on how long rates stay high. And I think when something starts to get real weak, and it's going to be delayed, the Federal Reserve, what they're doing is just backwards. But you're supposed to raise when things are kind of like just starting to move. You want to raise quick, and then you want to like kind of calm down and then lower rates a little bit to keep things progressing forward. They're going to overshoot this to some extent, and I don't know what is going to cause a break, and I don't think the market is that weak. I know a lot of people dwell on the weakness of the market, and I could be wrong here. Maybe we do crash. All right, maybe that's a possibility. It always is. But how you handle it and what you do afterwards is really where you make all the money. I mean, am I going to be sitting in a whole bunch, all 100% cash, just sitting on the sidelines waiting for this crash to happen? What if it doesn't happen? What if we rocket higher from here? How are you so sure that we are going to get this big old crash? What if it just goes sideways, you don't get a crash, and then we rocket higher and you're out of it? Now, I don't know the future. No one else knows the future, but I'm not trying to convince anybody that they have to do what I'm doing. I'm just sharing what I'm doing. Maybe bonds is the best play in the short term. Maybe you're right for a while. I'm not going to sell out of my stocks. I'm going to hold on to them. I'm going to keep buying on any form of pullback that hits a support level and I see strength to move on up, so long the chart looks strong, that it's a consolidation period where we could head higher. The fundamentals are all there. They're all good. The ratios are good. Everything from that front is good. So why would I sell? Because I could have short-term volatility? This is going to be a big bull market, guys. I'm not going to mess it up by trying to trade in and out of these stocks. Again, that's my opinion there. You guys can do whatever you want. I mean, obviously, you're going to do whatever you want. But that's been my approach. If you guys need help with anything, sign up for the finding-value.com Platinum membership. You can see my portfolio, what's in it. You can see all that. We can do a question and answer session, 5 p.m. Mountain Standard Time Sunday. You can ask questions. And it's okay. You can also disagree with me on some stuff and not take some of the things that I'm doing. That's 100% perfect. I don't know everything. Neither does anyone else. And just because someone who has a PhD or whatever, and they come out and they say, well, this is what I think it's going to do, and then everybody latches on to their idea, doesn't mean their idea is going to work either. Just because you have a PhD doesn't mean you have a control over the future. So the best strategies are the ones that work not knowing what the future is. Looking at companies that have massive cash flows. Looking at areas where they're paying down debt. We've got an inflection point and the macro tailwinds are behind us. Like, that's perfect. That's all I'm doing with my investments right now. Is there underinvestment? Of course there is. Is there going to be deficits in the future? I think highly likely that there will be. Now, could we see weakness in the first quarter of 2023 and get better buying opportunities? We very well could. And I hope and I hope we get that, because that means I can buy more shares, add it to the stable before this big bull market comes. I consider it a gift. Now, if I take a viewpoint where if I go up, my portfolio goes up, that's great. If it goes down, it's a gift and I can buy more. It's a positive and a positive. But you have to be wired that way. You have to be prepared to ride through some volatility as we go through this. You could see 40, 50% down times. And I think you will, even in the bull market. As we go up, you could see some pretty big pullbacks, some gut-wrenching ones. That's normal. That's what happened last bull market and the ones before it. So that's what I'm trying to kind of tell you guys. Like, it's not going to be easy. You're going to have to know this stuff. Because in order to ride through it, I'm looking out there with a vision. I'm saying, I think oil is going 150 plus, 250 plus, something on the lines of that, some large high number. And I'm in it for that. And these companies are profitable. They're cheap in relationship to the oil price today. It's perfect. They're going to start paying dividends at some point. So why wouldn't I be there? Because everyone's afraid of a crash that's coming up in 2023 that may or may not materialize. We don't know the size of it, and it may not even be a big crash. How do we know that? If everyone's guessing that we're going to get this big recession, usually it never comes. Because everybody sells their stocks, they sit on the sidelines with a bunch of cash, and then they FOMO back in. Not this guy. I'm going to be in it. I'm just going to ride through it. That is the strategy. I think it could have a pullback like 2001, 2002. We bottom, and then we we take off. It might take a year. It might take 6 months. It might take 3 months. I don't know the exact timing of it. And maybe the Fed does something where they overcorrect on both ways. They over tighten. We get a short-term down blip, and then they flood the market with a bunch of money, QE and all this stuff, and it just rockets higher. That could be an outcome too. But I know that there's deficits out there. That's what I'm invested for. I'm ready to ride through whatever volatility there is. All right, guys, give me a thumbs up for the content. Subscribe to the channel if you haven't. And that's all I've got. We'll catch you next time. This is Finding Value.